Hey guys, thank you for tuning in to another episode of Building Empires Network. You got your host Andrea Cruz and Miss Christina Franco over there.
Hello.
Yeah, and today we have a very, very special guest, Mr. Sergio de la Yata. He's a broker, realtor. He does new builds, flips. He also does lending. So he does a little bit of everything. We're gonna go over a little bit of all of that. So, Sergio, thank you so much for coming in.
Thank you. Thank you for having me, Andrea. And Christina, thank you for having me.
You're
Appreciate it.
welcome.
Appreciate it.
Yeah. So we were right before we started, we were just talking about some of the things that he does. Now, Sergio has been in real estate, like she said, and then he's been in landlording, and then also he's into hard money. So he did help Andrea in one certain situation, and we're gonna ask him about his hard money. So what do you do with hard money?
So specifically to that transaction, because I want to just clarify a little bit. Yeah, like Sierra Vista was able to participate in the transaction,
hmm
but what happened is that it was a very short-term loan because
Yeah.
you were just gonna buy it and turn around and sell it.
Yes.
Mhm.
So like it, when we use that as an example, it's going to be very short-term lending.
Yeah.
But then I do work with a company that I work with, almost exclusively
Mhm.
in terms of the hard money. And then, yeah, they do loans for roughly 6 months or 12-month option,
Mhm.
18 and 24 months. I've seen them go as far as 24.
Mhm.
Uh, Small balance, what you call kind of like the small balance commercial real estate,
Okay.
so like it was a small warehouse on Little York. I mean, there's
Mhm.
all sorts of properties they do. They've done, multifamily as well. And then they've done some larger loans as well for an investor that bought like 60 doors this year as well.
Mhm.
So it does boil down to the capacity.
Mhm.
And so in terms of capacity for lending,
Mhm.
I would say, my little company is small. We can do small loans, but they're set up to do much larger stuff.
Right.
Yeah.
So what is your max on just what are your requirements and your max?
Okay, so in terms of lending, yeah. So typically you're gonna do what's called business to business lending,
Mhm.
and so the business to business lending is it's easier to
Mhm.
work with.
Mhm.
I think we're all very familiar with the conventional,
Yeah.
the FHA, the VA loans, USDA. So those are a lot tougher to
Mhm.
qualify for.
Right.
Mhm.
But when it comes to business lending, like cash for keys can be a bar for a property
Mhm.
to purchase. And typically, what the investor will do is, buy it, renovate it, or sell it,
Right.
or buy it, renovate it, and then hold it as a rental. So that's
Mhm.
kind of like the coin is called the term is called BRRRR, right? So a lot of
Right.
people like to BRRRR properties, and it's turning out to be a very a good activity for investors to do.
Mhm.
Especially if they're paying a little bit more with the lack of inventory that we see right now.
Right.
Yeah, absolutely.
Okay.
Yeah.
So a lot of people say that you don't
Mhm.
need any money to start buying property, even with hard money. What's your opinion? And what is the best way to explain that for people? Because we know that there can be a holding cost on the rehab, and then there can also be points and different things. So, what is your definition of that no money needed?
So there is such a thing that can happen for the no money down. Specifically, like we'll use an example where somebody's buying a property for 100,000,
hmm
but there's still closing costs included with that transaction,
Right.
right? So there's fees that come with it, along with maybe a down payment that's going to be a requirement.
hmm
It just depends on the lender that you're working with and the relationship that you've built over the years, more than anything, because the cool thing about private lending is that it does in fact the relationship is very important.
Right.
If you trust the investor, and I trust Andrea
hmm
with the proper, and it's crazy because I'm in Houston, she's in Houston, and I knew that she couldn't get to the property, but I was like, I just know Andrea.
She'll do it.
She'll follow through, and
Mhm.
if worst case scenario, we'll try to work something out.
Right.
And luckily everything turned out okay,
Yeah.
right?
Right.
Yeah, it
Yeah.
did.
Mhm.
That was
Uh,
crazy because
yeah.
I didn't think I was gonna get that deal done.
Yeah.
But
Yeah. We were fortunate in that the end buyer of the property
Mhm.
was okay with paying for some of the closing
Mhm.
costs,
Mhm.
that
Mhm.
were associated with it. So the interest carry and all that stuff that came with the purchase and sale of it, he's like, I really appreciate this, giving me 2 weeks to be able to sell my property here in Florida so that I
Mhm.
can roll the funds into buying
Right.
that property. So that was
That worked
that-
out pretty good.
That worked out
Yeah.
really
Mhm.
well for Andrea. And then, the cool part about it was being able to be a part of a new market,
Yeah.
that
Mhm.
opens up some doors too as
Yeah,
well.
because he got, people got his information. So
Yeah,
Right.
yeah. Well,
Right.
the exposure, and then how I think we didn't have much requirements. I think we asked for insurance.
yeah.
Mhm.
That there's an insurance agent that's next door, so it's a lot easier to get insurance.
It's
Yeah.
a family insurance
It's a,
agency.
there's a family insurance agency,
I
so
have
it's pretty easy.
I have
You got
a
the
family
connect.
member pretty much
Yeah.
for everything.
Yeah, absolutely. And the thing about the insurance is it's very important, but it's in a flood area. There's a lot
Right.
of inclement weather that happens over there.
Right.
Yeah.
Right.
So it's different.
So your interest, how do you see the interest going on hard money? Because honestly, I think, in my opinion, and it's just me, I've never really seen on hard money anything less than, even on owner financing. Some of them, they're at 8-9% anyway. So that's really where the hard money was at. So, but where's your opinion on it?
So my opinion on interest rates is that they're trending up.
Mhm.
Next week, there's going to be
Another increase.
Yeah,
Mhm.
probably another increase for
Right.
sure, because prices haven't gone down, and so what ends up happening is that it will affect the real estate investor because rates will go up. A majority of the paper, in terms of when you say lending,
Mhm.
it will end up at banks,
Right.
and so a lot, including myself, including
Mhm.
my paper. It will end up at banks, and so you're subject to the market conditions. And so
Mhm.
if rates are going up, banks will charge more. Then your private lender will charge more, and so I mean,
Right.
there's just too much. I think there's too much real estate activity, and that's why they're doing that.
Right.
Including just the economy in general is doing well.
Right.
Yeah.
Yeah. And what do you, I know that you also do a lot of transactional funding, right?
Yes. So one of the cool things about transactional funding is that we help real estate wholesalers
Mhm.
that don't necessarily have a big buyers list.
Mhm.
We put it on the MLS, and we typically can get the highest offer
Mhm.
for that property
Mhm.
that the buyer's willing to pay.
Mhm.
And we usually get multiple offers.
Okay.
And so the cool thing about the transactional funding is that there's a way to be able to structure it to where
Mhm.
you put a property on the MLS,
Mhm.
and then the investor, the wholesaler, will turn into an investor. That's basically what we're
Right.
doing.
Mhm.
And we can wait, maybe it's same day closing,
Mhm.
or they can wait a week or two, like
Yeah.
we did in Florida,
Mhm.
as well.
And we've done a couple of like that.
Mhm.
Mhm.
You and I,
Mhm.
where the other one, even with the lot, remember? That one kind of went a little south. The one in 033,
Okay, yeah.
where the guy was like, "Oh, you." It's always something, right?
Yeah, absolutely. No,
And
the
there's, like-
transactions,
Yeah, 'cause
especially
it
when dealing
was
with
like,
people and
man.
dealing with investors, yeah.
But yeah, I mean, he helped me out because I had to do a double closing, so
Yeah.
he let me the funds for that.
Yeah.
Okay, yeah. Yeah,
Mhm.
yeah, yeah.
So double closing, tell them what the double closing is, Andrea.
Well, double closing. So the reason I used that one for double closing was because I had put the lot on the market, and then it was the builders that were buying it, right? And they were going through the financing, and their financing, like there was nowhere to put me in there to
Right.
say, hey, where's my fee? So I had to do a double closing so I can kind of show that I am the end buyer. And then from there, I'm gonna sell it
Sell
to
it.
the real actual buyer,
Mhm.
because I couldn't be just assigned that.
Yeah.
So that's the reason why we did a double closing on that.
Yeah.
And why that's important is because the title companies, they can't, or the lenders won't allow,
Right.
Mhm.
for an assignment fee to be built into the sales
Right.
price. And so it's
Mhm.
very important that if you can get access to some cash or liquidity, you could do stuff like this.
Right.
You can do these kind of transactions, and it makes everything a lot easier and cleaner,
Mhm.
including being able to discuss this with an agent.
Mhm.
So you see, what happens is when you list a wholesale property on the MLS,
Get in
the-
trouble.
you do get in
Yeah.
trouble, but the agent doesn't necessarily understand what an assignment fee is or
Mhm.
what an
Right.
assignment of contract is.
Mhm.
And so it's always just better to buy it and then just put it right back on the market. And
Right.
it's pretty easy. Yeah. I've been
Okay.
able to work with a lot of investors that are turning towards that, or, a few investors that are turning.
And that's where I'm heading.
Yeah.
Yeah.
We just did a net listing too, where I
Mhm.
didn't have to do a double close, which that was great.
Yes, it does save on fees. Yeah.
But
Mhm.
I put it on the market. The buyer was aware that I was going to put it on the market, and he was okay with it. And
Mhm.
we did a net listing, and that went pretty good.
Yeah, it did go well. The agent was able to be compensated as well, because that's typically one of the things, or one of the hurdles that happens with net listings, is that the agent wants to understand how they're going to get paid,
Right.
and that they're not putting their customer, that they have a personal relationship, typically in jeopardy. They don't want to put them in
Mhm.
jeopardy or in a bad
Right.
spot.
Right.
So it's interesting, but at the end of the day, I think it's really beneficial for the homeowner at the end of the
Right.
day, to be able to move it, because right now, the way I'm seeing things, it's
That's
tough
the
to say.
best way to do.
Yeah.
I mean, that's
Yeah.
I'm pivoting to that direction.
Absolutely.
A lot
Absolutely.
of novations and net listings, and
Mhm.
Mhm.
kind of staying away from the wholesaling just because houses are sitting on the market, which
Yeah.
we
Yeah.
still have a few on the market that we're gonna get to close on them, but some of them were on the market a little longer than.
Yeah.
Right.
Absolutely. Absolutely. So what you would have paid, a lot of the larger companies, a lot of the larger wholesaling companies, they typically have a dispo person.
Mm-hmm.
So you could almost, not that I'm saying that you want to
Ditch the
eliminate.
dispo.
Yeah, ditch the dispo. I'm not saying you want to
And
ditch
get
the dispo,
Sergio.
but it does help bring in a little bit larger of
It does.
of an offer.
Not
It
a
does.
little bit, a huge, a large.
I-
That's the reason why I do it. Because even that deal that we did for net listing, I don't think I would have sold it, wholesaled it. Like,
Yes, correct.
there's
Off
no
market,
way
yes.
off market.
Yeah.
I would have sold that deal.
Yeah.
So it
Yeah.
had to get exposed on the MLS for that deal to
Yes,
sell, because it was
property.
a
Mhm.
lot with the mobile home.
Yeah.
So
And we were fortunate that the buyer on that one, actually, they paid cash. They paid cash for it, so it was a clean transaction.
I can't believe we actually sold that
It's
deal.
pretty smooth. Yeah, yeah. It was a larger parcel. It was in Cyprus. So
Yeah, it is a good area. Yeah.
it's a good area, and so I see that happening a lot more and more.
Mhm.
I do caution people when they do this kind of stuff that they try to be compliant and try to be ethical, because what ends up happening is we're governed by the Texas Real Estate Commission as
Right.
agents, right? And so what happens, which is very critical, is that you stay within the boundaries,
Mhm. Mhm.
and I think there's a little bit of gray, and so you can use a little bit of that gray, but always try to follow the rules.
Right.
That's the critical piece.
Well,
of it.
one of the things that you got to let the seller know that it's going to
Mhm.
go on the market, because sellers
Yeah.
are going to go and look, and they always find it like, hey, why is my property on the market?
Mhm.
So, and a lot of people, what they're doing is they're letting the seller know, like, yeah, we're buying the house.
Mhm.
So you have to be honest.
Yeah,
with
you do
them,
have to be upfront.
because you
Full
can
disclosure.
get him in trouble, you can get your agent in trouble, and
Yeah.
so. And this
Yeah.
happened to me before, so
Yeah.
I got
Yeah.
Well, what I've been seeing a lot of is a lot of agents now acting as wholesalers, but it's not really being fully disclosed.
So that's a good discussion to have,
Mhm.
because I'm also, like I said, a real estate broker,
Mhm.
and here's what the feedback has been from the Texas Real Estate Commission, basically.
Okay.
And that is that if the real estate agent is acting not as an agent but as a principal buyer,
Mhm.
the Texas Real Estate Commission cannot get involved in contractual disputes.
Okay.
They don't. So what does that mean? If an agent that is also a wholesaler, gets a property under contract, delivers earnest money, right? Because that's very important. Even if it's $10, nobody ever talks about that, but
Mhm.
you
gotta
have to
go.
leave,
Yeah.
to leave earnest money at the title company, even if it's $10, $100, just something, because that's called consideration, right?
Right.
And what was I going to say? Oh, so yeah, you want to be able to leave those funds there, so that way you have what's called a earnest money contract,
Right.
right? So then the agent, because sometimes it happens more than times than not, the wholesaler will not deliver earnest money and just lock up a deal, and then cloud title and things of that nature. So it's tough. But my point being is, yeah, that they do the proper steps and full disclosure, like you said, to be able to work with the seller on this transaction. It's very important that if they're going to list it on the MLS, that there's a disclosure in there, like, hey, when you sign this contract, it says that, But yes, there are wholesalers that are agents, or there are agents that are wholesalers, and it's important, because sometimes there are transactions that the agent cannot list.
Right.
The homeowner will come to the agent and say, hey, I know that you're an agent, but I don't want to list it.
Yeah.
So then how is an agent supposed to monetize that? Right?
Yeah.
So this is one of the ways to be able to do it,
Okay. So it's an and or. It's not both. They can't act as an agent and a wholesaler together.
No, you cannot. That is
Okay.
correct. Yes.
Okay.
That is absolutely correct. You're either an agent, and you're buying a property, or you're an agent and you're listing
Hey,
the property. Yeah.
Mhm.
Hey, but if the numbers don't work as the wholesaler, just put on that hat. All right, no
Yeah,
problem.
exactly.
Let's list that property
Absolutely.
for you.
That is one of the cool parts about it is that as an agent, you know, you have multiple exit strategies. That's
Mhm.
very, very cool about that. I
Okay.
think that helps me, you know, bring in opportunities into the company, and then
Mhm.
we can figure out how we want to position that deal.
Right.
You know, yeah,
Mhm.
that's very important.
Yeah, that
Mhm.
makes sense. That makes sense.
So yeah, and as this market changes, you want to change with it. So those are one of the things that
Mhm.
I've done definitely is work with wholesalers. They're not all bad people. You know,
Yeah.
most of them are good people.
Mhm. Most.
Most of them, you know,
Most.
yeah.
Yeah.
So,
So go ahead.
oh, I was just gonna, because a lot of people don't know what net listing is. Can you tell them what, like, explain, you know, coming from you that you're a broker,
You're a broker.
a realtor,
Mhm.
Mhm.
how can they use a net listing, or how is a net listing used?
So the net listing essentially is a wholesaler has a home under contract, and in the language in the contract it
Mhm.
says that they have the ability to list the property on the MLS,
Mhm.
and you know you're going to work with an agent that is okay with it, along with the broker that's okay with it, that's you know kind of okay with you know taking a little bit of a risk,
Yeah.
Okay.
and then you're able to list it on the MLS in your local, you know, in your
Right.
local market, whether it
Mhm.
be, you know, Houston, Dallas, Austin, San Antonio, you know, the major metros.
Mhm.
You can go ahead and list it there.
Okay.
Yeah. Yeah.
Okay.
Yeah.
But
But
what,
it has to
how
be
does
fully
it,
disclosed.
how does it
And
work?
in terms of
though?
compensation,
Mhm.
so the closing is that once the agent shows the home, right? Because typically it's a home. I mean, lots it's much easier, but once it's a home, the agent will, you know, show the house and everything. They'll walk it. They're like, we like it at this price, and typically they do because right now there's no inventory, and the numbers make sense as a rental, so you
Yeah.
can buy it and hold it
Right.
typically. And what will end up happening is that you can assign that same contract to the end buyer, but in there, everybody's compensation is built into that assignment fee. You know,
Right.
Yeah.
Mhm.
So the seller is able to move their property. Say they only wanted 100,000 for their property,
Mhm.
and that's pretty much it. You know,
I
and that's
see.
that. That's in terms of the wholesaler. Now, in terms of like a net listing as an agent, because an agent can come in and talk um, to a seller and say, hey, you know, is it okay, you know, if we can come to an agreement that you only want 100,000 and we can keep anything above that? That does happen. We just signed
Okay.
a net listing as well there. The seller was okay. He said, you know what, as long as, you know, I walk away with 200, that's typically how the realtor can structure a, you know, what you call a net listing,
Right.
you know.
Okay.
But just to be on the safe side, when you're doing the net listing, you want to have what the agent calls an exclusive right to sell agreement, right? So the exclusive right to sell agreement is pretty much with the agent saying that they can in fact put it on the MLS as well. It gives them the right to do that as well,
Mhm.
along with your contract to buy. I mean, it should hold up, you know, pretty well. You know, whenever we're doing that, because I know I haven't asked for it, but yeah, it makes it
Mhm.
a lot tighter if you have that in place.
Okay.
Yeah.
I have a it's not a question. I want you to explain it. It's
Yeah.
basically like after a person sells a home and you've already sold it, they can come back at the owner. Isn't it like up to 6 years for something that went wrong with the home that wasn't disclosed?
So yeah, so what you're talking about is like the statute of limitations on something like that, right?
Right.
So when you purchase a property, fix it up and sell it. I've had something like that come back on me specifically.
Okay.
I bought a property with a partner in the southeast part of Houston, and we sold it as is.
Okay.
We actually, you know, we bought it for 30, sold it for 45, you know, made a small margin, and we sold it as is to the investor that
Okay.
then turned it around, renovated the property, and then obviously sold it to a homeowner. And this was back in 2018, I think. And you know what? The reason that it became an issue was because of Hurricane Harvey. So the
Okay.
property was bought and sold in 2018,
Mhm.
and you know we were selling the property as is, but we made the mistake of not disclosing, like, hey, this property was in fact affected by Hurricane Harvey,
Right.
even though it's not in a flood zone.
Okay.
That property was not in a flood zone. It was right
Yeah.
off of the, you know, Cullen area and 16 inside.
Mhm.
Yeah.
So yeah, back when properties were cheaper, by the way.
Right, yeah.
You can't find properties for
No.
30,000 in that area.
No,
you
we
can.
bought a bunch in there, 15,
Mhm.
20, 18,
Mhm.
8.
Yeah.
Like,
They-
yeah.
Christina, I hate you. She's always like, I got 20. I'm like, 20.
Yeah, like it was crazy back then, but now it's like,
all this
Yeah.
in the southeast part of Houston, like
Yeah.
inside 610, and now those home values have shot up. And so, but to answer your question, yes, they can. I mean, they can. And
So what ended up happening?
what ended up happening is we hired an attorney and we ended up settling,
Mhm.
and basically what happened is the property did get flooded, specifically because of the way it was built. The street sits this high and then the house sits a little bit, so the water just kind of
Right.
came
Yeah.
in. But I'm still of the side that it wasn't affected during Hurricane Harvey, but I'm
Right.
pretty sure it was.
But how did that affect you? What came back to kind of?
So what came back is that we were, asked questions and we hired an attorney, and then we were let off. Basically, the defendant said, "Hey, this person failed to disclose. The wholesaler investor failed to disclose to me, Mr. Flipper, the one that I
Mhm.
renovated the property, that there was things wrong with the house."
Mhm.
Well, the plaintiff attorney said, "You know what? That doesn't matter. You knew you were buying that investment property as is,
Mhm.
where it is with all its
Right. Mhm.
issues, and so and you knew that you were going to go in there, fix it up, and then sell it for a profit."
Right.
Right.
So
you-
we were let go of the lawsuit, but we were tied into the lawsuit initially. They wanted
Yeah.
to bring us in.
Wow, that's crazy.
And see, and that's one of the things because, and I asked the question so it can be reiterated the right way because I'll be like, yeah, this happened. But the thing is that it happened to me. When you are a flipper and you're saying, I fix this and you sell it, and now you're responsible for whatever, with that on the statute of limitation.
Well, on the
Absolutely.
seller's
Mhm.
disclosure, you have to, if you put something like that, it works, or
Mhm.
that's why sometimes I just put
Yep.
unknown,
Yeah.
because then they can come back and hold you
Yeah,
reliable.
and that's why I tell people write a paragraph. I mean, write a paragraph, make them sign it,
Yep.
keep it, because that's saying that they've agreed, they checked on their own will. They let them write a waiver for an inspection
Correct.
because it was up to them. You gave them the opportunity to inspect, and if they chose not to, they accepted it as is, where is. Because there are people who will challenge the as is, where is, and you can fall into trouble like that.
Absolutely.
And here's another thing, and tell me if you agree, because I've been telling a lot of people this, because I get it to where the wholesaler is like, well, it's being sold as is. But now you are putting yourself, once you sign that contract, you are putting yourself in a position that you are now the seller. So wouldn't that fall back on them?
It does. It does.
See, I told you.
There is some responsibility whenever you're
Mhm.
buying and selling.
Right.
It's definitely different. You're not just assigning a contract. Once you're
Right.
buying and selling on the MLS,
Mm-hmm.
we do have some risks that
Right.
but again, you get a higher price, but it does
Mhm.
come
Yeah,
with some
it
responsibility.
does. Yeah.
That is correct. Yeah.
And that's what I've been trying. A lot of people argue with me about that. Like, well, I'm not the one selling it. It's the owner. No, but you just put yourself in a seller's position.
Yeah. Whenever
That
you're
is the
buying and selling,
assignment.
yeah. Once
Mhm.
you're buying and selling, yes.
Yeah.
If you're signing the contract, it's a little bit different,
Right.
right? Because you're
Mhm.
just assigning a contract. Yeah.
Mhm.
But again, I'm not an attorney. I'm not
Yeah.
a CPA. I'm not
Yeah.
just a real estate broker that.
Yeah.
has-
No,
we
not
sell
just a real
property.
estate broker. You're
He knows
bringing
a
out the
lot.
information. Yeah,
Yeah.
he knows a lot. But I know that when I was talking to our attorney about it, because we had somebody come after us over an assignment, they turned on the electrical and it shocked somebody. And I'm like, well, what does that got to do with me? Where'd you put your finger in the socket?
Yeah.
And, but no, that wasn't the case. But the thing is that they were saying that it was a wire that was hanging out. I never walked the house. It was kind of a virtual
Mhm.
sell. So it was like just hand it over.
Yeah.
Right.
But I said everything was okay. I got out of it. But the fact is, people who don't have the money for the attorney to get out of it,
right.
Yeah,
you're
correct.
stuck.
Yeah. And those
You're
are the folks.
stuck.
Yeah, those are the folks that are starting out and starting out in the real estate industry.
Yeah,
So,
I think that's where I'm going with it because, like Sergio is able to get an attorney, hire an attorney. But if you just want to wholesale because you're just trying to make money, and you go have a $15,000 assignment, but you got a $25,000, lawsuit, like,
Yeah, they can be sued for misrepresentation. I mean, if you're
right,
or gross negligence, I mean, they can
Mhm.
happen as well.
yeah. See, those are the big words.
Yeah.
Yeah, well, that happened to me too, where we got sued, where we sold a property to an investor, and the seller lied on her affidavit. So then a family member came back,
Yeah,
and then I guess they were like, "Hey, I'm part of the sale of this home, and I
Mhm.
wasn't put in the affidavit."
right.
So then we got sued,
Mhm.
and then the seller got sued, and everyone got sued. But I haven't heard from the guy, so I'm
Yeah.
guessing I'm on the clear.
Yeah.
I don't know.
Well, you know,
Maybe they'll hit me next year, because I know with COVID helped out a lot of things, but
absolutely.
yeah, it happens. And
Right.
we got sued too, and I'm like, well, dang, I think that was a lady who lied, but because we were
Yeah.
part of it.
Mhm.
Yeah.
Now, there are some certain circumstances that I ran into one, and we bought the house, we fixed it, and then somebody came out of the woodworks, and it was like, oh hell, now what? But I own 80%, because it's that one, but everybody else signed. But I own pretty much like 80% of the property. So now I have an option to sell it to her for everything I put in plus everything I paid out, and she can buy me out at 100.
Mhm.
But she decided not to. So we just kind of gave her something, and
Yeah.
she went her way. But when you come on to stuff like that, there's errors. You will have to get an attorney and fight it, but always keep your records right, because if you lose that one paper, you're going to be stuck in a rut.
Yeah.
Yeah.
No. Yeah.
Mhm.
And regarding, the condition of the home and the final condition of the home, like if even the wholesaler could do this too, by the way, have a document saying that they accept you said
Right.
accept the property as is. Well, in the traditional world,
Mhm.
there's a form that, buyers can sign saying, hey, I've walked the property, I accept the property as is.
Mhm.
That pretty much, that's something
Clears.
that it should clear up a lot
Mhm.
of,
Right.
questions that may come up or arise
Mhm.
later on,
Mhm.
and then, I will tell you something in terms of the market. What I'm
Mhm.
seeing is the folks. So before, in 2020, 2021, a lot of people were doing really well in real estate
Right.
by only, simply cosmetically repairing the homes.
Mhm.
I never did that because I knew
Right.
that sooner or later, that would kind of catch up, because right now a lot of people are stuck with inventory and the
Mhm.
home's overpriced
Right.
and they overpaid for the property. They under renovate the house and the
Mhm.
customer can tell the difference right now.
Right.
Oh yeah, I have to say that.
Yeah, they can tell.
I was the one that was going and not renovating that great, but still was able to sell.
Right.
I cannot do that no more.
Yeah.
There's no way that those times are gone.
Yeah.
I took advantage of the time. It was nice.
Absolutely.
It was
Absolutely.
nice,
It's
but
very
now,
profitable. Yeah.
yeah, we have a couple properties that we have on the market, and we
Mhm.
went in there and I put granite. I never
Yeah.
put granite on a house, but I
Right.
did it. I did it still level 1, but I had to because I know that it's not gonna be that easy to sell.
Right.
Before, I literally would just clean them up, put them on the market, and it's
Right.
like bam.
Yeah.
They were
that
like
last one in
making
Humble was like,
off-
dang.
Well,
Yeah.
offers like
Yeah.
over asking. I mean, and I didn't even do nothing to that one.
Yeah.
Nothing. I didn't
Mhm.
touch nothing.
Yeah.
And we sold it for 200.
Yeah.
I mean,
Yeah.
those
Mhm.
times were nice. Um,
Yeah. Well, that's changed. The
that's
market's changed.
changed.
Yeah,
and
that's
I knew that with these 5 last ones that we bought, that I had to do that because I
Mhm.
saw that they changed, and I'm
Mhm.
like, yeah, I think
Yeah.
I'm not gonna be able to get away with that. So let's go ahead and add the tile, backsplash,
Mhm.
little things. We're still making a good profit, but
Mhm.
before I never did that. I was
Right.
like, man, I'm not
Yeah.
doing
Mhm.
nothing to this house.
Yeah.
But now he's totally right. You got to go in there and fix that.
Fix those
Mhm.
You
things.
can't do those anymore like
Yeah.
that. It's gonna sit on the market for a while if you
Yeah.
don't fix them up the
Yeah,
right.
because the market's getting competitive. The buyers, I still think there's a lot of buyers,
Mhm.
but they're getting kind of spooked of what's
They're-
going on with the
And they're
economy.
getting
Mhm.
picky. So
Yeah.
Yeah.
on the inspection report, I've never had any issues with inspection. Like people didn't even care. They're
Right.
like, "Oh, this is wrong. Okay, I'll buy it anyways." They
Yeah.
didn't care.
Yeah.
Now we're like changing roofs,
Mhm.
changing
Yes.
things, and I'm like,
Yeah.
"What?" Like,
Yeah.
You know.
Mhm.
So
Absolutely.
yeah, it's changed. I can tell,
Yeah.
and even now I'm like, "Dang, I didn't even have to do that before."
Yeah.
And
Yeah.
this is just before summer.
Mhm.
Right after summer, like now I got to change the roofs
Yeah.
and all that. So it's definitely changing. But I
Yeah.
mean, it's still there, guys. I feel
Mhm.
like just make sure you get it low enough. If it
Yeah.
has to sit on the market 3 months, 2 months, people are still gonna buy houses.
Right.
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 I mean, I like to stay anywhere between 250 and below.
Mhm.
Anything over may stay a little longer, but I think it'll still eventually sell.
Right.
But one of the things that's helped me a lot, and I feel like this is because it made the houses sell a little faster. I've been painting them from the outside to
Mhm.
make them look a little newer.
Yeah.
And just that.
It's
Just
not a
Yeah.
large investment.
it's not,
Mhm.
but
It's
it's
not a
like
large investment.
people are like, damn, it looks like a new home.
It
And then
does,
I've been
yeah.
kind of doing the black and white, so
Yep.
they sell quicker.
Yeah.
So
Absolutely.
those are little things that I've changed in my business to kind of pivot. Like, okay, now I know I can get away with this.
Mhm.
But it's little things like that. Like you're still gonna survive, but
Mhm.
you just gotta change it.
It's gonna require some extra work. And
Yeah.
everything, yeah.
Mhm.
Mhm.
So
So yeah, those were good times, and a lot of people did really well that were in
Yeah.
real estate. But when the market condition changes, then you have to kind of pivot with
Pivot.
it and
Mhm.
change with it as well. And that's very important. Very
Yeah.
important. that
So
people see.
in the landlord world, how are you maintaining? Are you getting a lot of evictions and stuff?
So the people are paying.
Mhm.
The only problem and the reason that they're becoming tenants, like we were discussing
Mhm.
earlier, is because rates have moved up,
Mhm.
and when what that same house that they would have bought,
Mhm.
they can now rent only, and they're
Right.
gonna have to sit on the sidelines, and they're gonna have to wait. I feel. I was telling you about the property in Spring that we
Mhm.
had for rent, and it wasn't necessarily like the best looking home,
Mhm.
but we had like 40 people go
That
see the
was-
property, and we had multiple applications, and we were able to choose. So
Mhm.
that just goes to show that there's
people
still a
are
need for housing.
renting.
Well,
Yeah.
it's just a need for housing, but still,
Yeah.
rentals is it's gonna be strong. And
Right.
even if we go into a recession, which it's likely that will happen,
Yeah.
We are in a recession. Where the heck you been, Sergio?
well, it hasn't officially been declared, but
Right.
it will be, right?
Right.
And so
Mhm.
rentals will still, there's still going to be a place for rentals. I
Yeah.
think.
Yeah, and even like houses, like this is a good exit strategy. I'm always thinking of exit strategies. Like, say for example, you're not able to sell one,
Mhm.
just refi and rent rooms.
Yeah.
Maybe get a little bit more out of it. Like
Yeah.
people are always looking for rooms. You got registered nurses, things like that. You can also Airbnb depending where the area's at, but
yeah.
it's fine. I
Yeah.
feel like this is a time where you're gonna really learn.
Mhm.
Like, hey, this didn't work. What else can I do?
Right.
And
It's important to point out, to add to your point, that in this kind of tough, market that we're going to be in, I feel like creativity is what's going to get you ahead.
That is it right
Yeah,
there.
creativity is going to help you
Mhm.
get there. The standard way of how we did business is, it's not,
it's
it
not.
was really good.
It keeps changing.
Yeah.
And
This
so-
year it was booming, and then I'm, hey, I went from hotel queen, now I'm a net listing queen. Hey, I'm changing with the market, guys.
Yeah.
But yeah, because you have to pivot.
Right.
I'm not like the last house that I closed. I am going to do a sub 2, which it's different, but I'm not going to close on anything. I'm just going to do novation or
Yeah.
net listings and wait to kind of see.
Yeah.
But I'm not going to stop.
Right.
I'm not
Mm-mm.
going to stop. I'm still
Yeah.
finding ways. Terms, owner finance.
Mhm.
You got to get creative, and I
Yeah.
like that because it's like, okay, now this is going to require a different
Mm-hmm.
different technique.
I say you want to learn,
Right?
you gotta learn today.
We're doing like that house. What I was calling you, that we're going to do new builds and things.
Yeah.
And a lot of people are like, "Hey, man, are you sure you want to do this right now?" And I'm
Yeah.
like, "Hey, man, it's now or never."
Yeah.
So I'm the type where if I don't do it, I'm gonna regret not doing it because I'm never gonna know if it would have worked or not.
Right.
And if I did it and I got myself in a deep hole,
Mhm.
well, then I'll figure a way to get out of it, and I'm
Right.
sure I'll learn something
Working
from
on
that.
Mhm.
So I don't think there's a way I can lose. I mean, the way
No.
I look at it,
No.
So
there's multiple exit strategies. You just have to
Yeah.
get creative and
yeah.
find a solution.
Hey, if I have to turn that house into a whorehouse, I mean, we'll do. The reason I say that because it used to be like.
It was one.
Oh,
So it used to be one. So I'm like, hey, we got to get back in business. Let's do that. You just got to get creative. You got to get creative.
Yeah, you don't
So-
miss shit on here,
Yeah.
what?
yeah.
I feel like we contaminate.
Yeah,
search.
I didn't know about that.
Yes, that's what
Yeah, that
Good
happens.
deal.
that happens.
No,
So-
but no, I just lost my damn train of thought. That was
Yeah.
crazy.
No, but I mean, like, just whatever happens, just don't stop.
Yeah.
Don't feel like, wow, right now I'm gonna stop my marketing, or right now I'm gonna do this. No,
Yeah.
like
Yeah.
keep going.
Yeah.
This is like they said, this is a time where either it's gonna go good or bad. I'm in
Yeah.
it to see what's gonna happen.
Yeah.
I've seen some folks that were in real estate. They're gonna take a step back and
Mhm.
you know, they're gonna take a step back and, you know, maybe look for employment and stuff
Yeah.
like that. So it's tough.
Really?
Yeah.
tough.
Well, I'll
Yeah,
tell
that's
you
never even
what.
crossed my mind.
But there's, you know,
There's some.
for you, it's
Hey,
it's
I'm
kind
over
of-
going the opposite. I'm getting myself more in riskier shit that I
Yeah.
probably should have done at the beginning of the year, and I'm doing it now.
Yeah.
Yeah. No,
So-
it's a changing world, and it's what he's saying. And right now, this is where we're getting the twist. This is where a lot of educated people that some companies feel are overpaid, they're letting go,
Yeah.
and they get downsized. And I'm telling you out of experience about where downsize is, because I mean, I had these 5,000 something square foot homes, and now I'm like, keep cutting it up, and we're moving houses and trying to get rid of those. And it's where you have to know you're going into safe zone. People are like, oh no, this is what it is, and you know, you're doing something wrong. And I'm not doing nothing wrong. I'm doing what I'm supposed to do. Sometimes you feel like you're punished for working and making it work versus just sit there on my thumb and just collect a check every month, you know?
Correct, yeah.
You have to pay to work. You have to pay to play. And there's some people that could just sit at home and do nothing and just live it right. You know, I pay $15 on a subsidized housing and live in houses bigger than we do. And and it's really crazy the way life is, but it is what it is. So, you know, you want that luxury, you're going to pay for it.
Yeah.
You're going to pay for it. And another thing is where I'm saying is we had a house over in like the back of Kingwood in Atascocita Shore, beautiful house, whatever. We had put it on the market. We were going to downsize from that because I went through a time where I had like 3 or 4 homes at one time. I had 4 homes. So I was like landing because I was always working and I didn't like driving. So I was landing in different areas. So now what I'm doing is I moved to one house and then now we
She's
sold
like,
it.
I'm working on 290. Let me go buy a house.
Let me go stay over there. The thing is that we have a lot of houses in different places that didn't move like they were supposed to. When we bought them, the intention was to flip them, and COVID came, the freeze came, all those things came. So there was a lot of obstacles coming and a lot of things just sitting.
Yep.
You know, and you have to understand 2 years of a $2,000 payment on interest only a month is going to be 48,000, right? Yeah, it's going to be in 2 years. In
Yeah.
2 years, it's
Yeah,
going to be
that's what-
48,000 interest only.
Yeah.
What did you win? Nothing.
Nothing.
But did you survive? You know, so that's the thing. I've survived it. Now, you know, I have to start moving different things. So my thing is, if I sell it, now that I'm at a point to sell it, I'm going to have this odd capital gain. And it's a very odd capital gain because they're going to say,
Yeah.
you got gains. And you're like, no, I just paid this much in interest.
Yeah.
And they don't really see that, you know? So it's like, well, the hell with it. I'm going to rent it. So then you do what? You do the Burr effect. You go and you rent it. So now I'm going to take it off the market. I'm going to rent it and then I'll refi it out, you know,
Yeah.
but still I'll be at a 20,000. I was telling you like 20,000 a year, you know,
Yeah,
versus of what it is. I'll be
Yeah.
making 20,000 a year off of that versus being penalized on a
Yeah.
capital gain, 20,000 more than 20
for buying and selling.
for buying and selling real estate. So
Yeah.
basically they really
20% on capital gain.
no, no, it-
35.
I think
18.
I'm at 32. I'm at 32 right now. Yeah. So there's brackets. So I think I'm in the 32, 30 something.
Yeah, the brackets.
Yeah.
Tax brackets.
It depends on where your tax bracket
And
is.
it's self-employed, yeah.
And that means I'm
Mhm.
on the 10 then.
You're like, I want to be a 10.
If you're in the 30s, then that means I'm on the 10. No.
Yeah. But what I'm seeing is, you know, the more you make, the more they take. Okay. And that means, you know, like IRS, like they just went and hired a shitload of agents to start picking at, you know, everybody that hasn't been caught up. Did you hear about that?
Correct, yeah.
Yeah. So it's like, you
They're
better hurry up
coming for you.
Yeah. Yeah. So that going into all that, you know, where you have to pivot and change. And I mean, our life in real estate is literally a monopoly board. It is a monopoly board. Everywhere you land, you're going to pay. And anytime you gain, you're going to pay. So it's constantly a cha-ching, you know,
Yep.
You're constantly paying. But on that note, what we did, we sold it. And now I have another house. And I told my husband, I don't want to be driving to Kemah every day because they're doing the highway. And so imagine I was sitting in traffic an hour and 45 minutes.
Today.
No, just
Oh,
any day in
jeez.
general. And I mean, now we're going home at like 8:45 at night because we're moving. So I'm like, hey, I've got this vacant house. Let me move in it. I'm a squatter in my own property. So I'm kind of squatting. I'm serious. I'm backpacking. So, you know, I told him, I said, no, but we're rebuilding a house, but to move into the city, but you can't find nothing reasonable. You can't. I mean, for what you want. If you want land, you're going to pay over 500.
Well, I think right now it's just too high. And,
Yeah.
you know, I was talking to Billy, you know, because he helps me out. And one of the things he was saying that we got spoiled with all the houses selling so
We
quick.
did.
He said, this is how it was before all of this, like, you know, people from California came and houses were normally on the market for 30 to 35 days.
Right.
And that was normal. He's
Mhm.
like, so this is not like, yes, we're going through a crash, but houses are still, I mean, depending on the price point, right? But
Yeah.
Right.
if you're looking at anything 300 and lower, the houses are still going to sell.
Mhm.
People are always looking for houses. People have to buy houses. People are moving in from other cities, you know, things like that. So he said they will eventually sell. They just going to take a little longer,
Right.
you know. So now just add that on your, you know, whatever you're
Yeah.
doing, your numbers. Worst
Mhm.
case scenario, 4 months or something, you
Yeah.
know. But I think people should still do their thing. I mean, I don't
Yeah.
know.
Yeah.
It's
that's
slow
why-
down, but you can still, hey, you know,
Mhm.
something.
Yeah.
Well, that's what I'm saying. The best thing right now for us that's been working is buying and then renting them out.
Yeah.
Mhm.
Mhm.
Yeah, because
Yeah.
you still get to cash out.
Yeah.
You know?
And you're still
Yeah.
getting that constant cash flow. So that way, at least the financial burden doesn't come from you to have to pay the mortgage every month.
Mhm.
You know, your tenant is helping you with that.
Right.
So,
Mhm.
we're very thankful.
Can you explain to them a little bit better? Not better, but I mean, you know.
No, yeah,
the
like
Burr
in-
method.
so
Yeah.
the Burr method. So the Burr method
With all
is
these dumb methods.
Yeah.
you buy a property, right, and then you're going to repair it,
Mhm.
and then you're going to rent it out, and then
Mhm.
refinance it,
Right.
And
right?
then
Okay,
repeat.
Yeah.
and then
Uh-huh,
repeat.
and
Oh,
then
And
okay.
repeat.
Okay,
That's
and
the
then
other
repeat.
R. I always
Yeah.
get lost on the
Okay,
other
yeah,
R.
because I was like,
You're like,
I
there's
know
another R.
Burr,
You
but-
just said Burr.
Yeah. Bert.
Yeah, exactly. I
You
said
forgot the
Burr.
other R.
Gotcha.
Burr.
Burr.
Be like that, Cardi. Oh.
Yeah.
Okay. No, but
Good.
see, it's so that they can understand where you were saying the leverage of it.
Yeah, so you can buy a property with a private lender, right? They're going to give you the funds to be able to renovate it, especially if you're buying it at a good price,
Mhm.
right? So there should be some room for you to be able to fix it and leave the house in pretty decent condition, and then from there, you're going to rent it out, right?
Mhm.
And you're going to come into an agreement with your tenant and say, hey, okay, yeah, we'll pay $1,000 a month,
Mhm.
and then you sign a contract, and then you can go to your lender, right?
Mhm.
There's going to be multiple types of lenders that do 30-year lending. So
Right.
those are called
Do you do non-QM?
yes. So right
Mhm.
now we have a little bit of both. We have bank financing, and then we also have non-QM. And the
Mhm.
non-QM is what you call DSCR.
Mhm.
So it's called the debt service coverage ratio.
Right.
And they don't check your tax returns, personal financial statements. But what they do check is your credit report
Mhm.
and what the house can rent out for.
Mhm.
So they just base it off of that. They will order an appraisal.
Mhm.
Both lenders, both the bank financing and the non-QM
Mhm.
will order appraisals because they want to make sure.
Mhm.
So they want to make sure that you,
You're not upside down.
yeah, you're
Right.
not upside down.
And to tell you what the non-QM is, because these are words and abbreviations you can use yourselves, is QM is a qualified mortgage. You got your tax returns, you got the money, you got the down payment, you got all this. A non-qualified person is what it means. A non-QM is non-qualified mortgage. So it's kind of more, that's where it's the hard money part comes in.
Yep.
And they're gonna gamble on the actual value of the home
The asset,
more than the asset than you.
And then they probably gonna give you a higher percentage if you did
Yeah.
if you didn't do a non-QM.
So the thing about hard money that makes it sound bad
Mm-hmm.
is that people don't realize that the reason they call it hard money is because they're lending on the hard asset.
Right.
And traditionally, hard money / bridge financing was
Mhm.
supposed to be was intended for commercial properties.
Okay.
That's why it's called.
That's right.
That's
That's
where-
your
that's
coming
where it
up.
goes,
You know,
yeah.
that's where
Exactly.
it starts to get
So
deeper.
that's
Yeah.
where that initially was supposed to be. And
Uh-huh.
so your shopping centers,
Mhm.
your warehousing, larger properties, commercial, hard money or asset-based lending
Right.
or bridge financing helps you with that, or even multifamily as well, because you can use that. So
Mhm.
it's hard money.
Right.
But even the people that lend on the hard money now want to make sure that you
Mhm.
have at least you qualify for the exit strategy, which is to refinance.
Right.
So a lot of people are getting tied up a little bit tighter on that.
Mhm.
Another thing too that I've seen in the marketplace too is they used to lend, 75, 80% of the
Yeah.
value of the after repair value because things were really hot and it was
Mhm.
moving up. Now they're definitely getting tighter on the 70% rule.
Yeah.
70.
Yeah. We had one that was
Jeez.
60. Remember, I had to take 200 and something.
Yeah.
Yeah. It was 60%. I was like, what? When I was usually at 80.
Yeah.
They went from 80 to 60 real quick.
Yeah.
Mhm.
So how's that gonna work now if you're gonna rent it out? You definitely have to get it really cheap.
Yes, you're
Yeah.
still having to buy a good deal, and you can pretty much guarantee that if you hold it as a rental, that you should do okay.
Then you at least
Yeah.
get at 50% because
Right.
you fix it, then you're going back to 50 pretty much.
Yep,
Mhm.
absolutely,
Yeah.
absolutely. So, and the banks also as well that work with the private lenders,
Mhm.
instead of them, giving you, 70, 80% of that loan,
Mhm.
they'll stick to 50, 60%. So
Yeah.
there's going to be less lending going on right now with rates the way they are, and the
Yeah.
rates are also going to move up as well. So
And that's going to affect the BRRRR
Yeah.
effect. It really is. Because if you were banking, like me, if you were banking on 75% and they came back with 60 and it didn't make sense to pay off, this is on a loan that I just did. It didn't make sense at all. I was paying more in fees than what I would even be getting back to pay off my people that I owed on it. So it was
Yeah.
like,
yeah. Any deal is a deal to lend on if you have cash,
Right.
right? So a lot of times when the borrower has a lot of cash, well, it's great because you could, buy a property for 200 that's worth, 250, but they're going to ask you for a $50,000 down payment.
Mhm.
So that,
Mhm.
I mean, yeah, any lender will lend on that because
Right.
their loan to value is pretty good.
right.
you
Yep.
know?
And they have
So-
to make sure they have the money there if you do belly up,
Yeah.
if you fail. And that's the whole purpose of everybody say you have to have skin in the game. So basically that's your ass.
Yeah.
You don't want to lose what you pay for. It's kind of like a
Yeah.
renter. They won't change the air filter because it's not theirs,
Yeah.
but we'll go in there and change it all the time. So it's that same scenario. You have to have some money in it. So that's why they want pretty much 25%. It used to be 90-10.
Yeah.
And now it's 25. And then it's also, now we're going down to 40. So on 50-50s.
Yeah.
Mhm.
Mhm.
So as lending starts to, get a little bit tighter, you're going to see less and less transactions happening like there
Right.
was before. But before, everybody was just.
It was
So what do you
slamming
feel
it.
like for realtors? What's gonna happen?
So for realtors right now, my observation has been, including myself, because, sometimes I get opportunities to be able to work with buyers, but right now it is going to balance out, and it's going to be the folks that were always focused and, having a difficult time with buyers. I think it's a great time right now.
Yeah.
It's a
Mhm.
great time to be working with buyers because there's a lot of inventory that is going to be sitting a little bit longer. And so it
Mhm.
gives the buyer the opportunity to pick and choose whatever they want.
Right.
Well, there you go.
Yeah.
I think it's a good time.
I think it's gonna be an opportunity for
Yeah.
Yeah.
it's both sellers,
Yeah.
the buyers, sellers are gonna be able to. Yeah,
Mhm.
buyers will have the chance.
Like I say,
buyers
it's
will
a
now have
game.
chance. That's
Life
good.
is a game of tag. You're it.
Yeah.
That's it. Tag. We're it.
Yeah.
Y'all, we're doing good. Now it's us.
Yeah.
So that's all it is. So that's why I always try to stay on.
Hey, that's why
On
you have
both
to be
parts.
seller and buyer.
Yeah.
You
Seller,
have to
buyer,
be
and
both,
employed.
Right?
Absolutely.
Yeah, I'm seller, buyer, and employed. Yeah. So that's why. And even with the commodities, everything's changing. Gas. I'm starting to see gas is starting to go down.
Yep.
Everything's changing. So it's pretty good. I mean, it's you're just gonna have to pivot.
Yeah.
You're gonna
Yeah.
have to pivot.
And for a long time, to add to your point, that it was how should I say this? It was very difficult for a private lender because he
Mhm.
would loan you the funds and then you
Yeah.
were paying him off in like 2-3 weeks.
Right.
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 So it was just like a quick turn, like Jesus Christ, like no interest was earned and
Right.
so now it's pivoted a little bit, right? It's
Mhm,
changed. So
mhm.
now the flipper is going to have to pay more interest
Right.
and leaving the lender to earn more interest,
Mhm.
So before though,
Hey, so
remember-
now it's time to become a lender.
Yeah, so it's time to be-
Yeah, we're
Yeah.
going out for the.
Yeah.
I think we were just talking about that, right?
Mhm.
We're going to go out for lines of credit.
Yeah.
Yeah,
Yeah,
to
so
start being that lender.
the lender is where it's going to be right now because even though that there isn't a lot of activity, there's still a lot of investment going on. I
Mhm.
think those are the people that still have cash. So I'll list an investment property for sale, and we do get multiple offers, and like on your properties too. But the reason for that is because the investor, the real estate investor,
Mhm.
has cash,
Right.
and
Mhm.
not necessarily the first time home buyer.
Right.
So
Right.
I feel like right now is a great time to focus on those folks,
On those
working with those folks,
Mhm.
selling to the investor. Because, for the last property we did was for sure an investor. 'Cause they
Oh,
pay
yeah,
100%
for sure.
cash, and
That was
they have them
nice.
hold. Yeah.
Yeah.
And a majority of the transactions that have happened in the last 2-3 months for us personally, like what we've seen, has been cash. It hasn't been financed.
Wow.
A majority of
Well, I've been dealing with financing. Before I used to have cash,
Yeah.
like
Oh,
when
okay.
I was buying, and now it's the financing. I'm
Yeah.
like,
Okay, so
Yeah.
Yeah.
You hate those points when you're walking in.
yeah.
You hate those points. Get what
Yeah.
you can get. I mean, you can find some brokers that are out there kind of negotiating and stuff, on
Yeah.
their points, because honestly, you got to start getting those deals moving.
Mhm.
And some people do not want to pay 3, 4, 5 points. Like, come on,
Yeah.
that points is a percent for every 100,000. So if it's 1 point, then it's 1,000. If it's 5 points, it's 5,000.
Correct.
So if it was 100,000, you're at 101 plus closing and all that other mess. And if it was 5 points, you're at 105,000 plus whatever. So imagine somebody, charging that on top, And
so like if it's 5 foot, it's kind of out there, but let's say 3 points.
it's out there, girl.
I
Right
know,
now, it's
I know it
crazy.
is, but 3 points,
Mhm.
and then if the house is 300,000, you're paying
12.
3,000. What 12,000 was 3, 6,
Well,
9,000.
9,000
So it's just 9,000
just to that broker. Yeah,
and
just to
that's
the
not
broker.
including whatever
No.
document fees and.
No. But people do pay the broker because they're the
Just
ones that
to-
make your deal work.
Hey, let me send you these papers fees.
Yeah.
They have all kinds
Mhm.
of fees in
Yeah,
there.
they do. Yeah.
Take a look at the form fee.
Mhm, the yawn fee.
I had to write this down fee.
Yeah, so-
Yeah.
So you have right now you're also doing the hard money, right?
Yeah, so like I said, working, doing some small stuff.
Mhm.
Something else that's been was good earlier, but I'm
Mhm.
starting to, curtail a little bit or stop, remove myself from doing it a lot more, is the gap lending.
Right.
So a lot of people are not familiar with gap funding, but the way gap funding works is, you have your primary hard money loan,
Mhm.
right? So let's just say it's 100,000, and then you need maybe help with the down payment,
Mhm.
or you're getting towards the end of your project, but
Need funds.
you need additional
Mhm.
funds. That's where the gap funding comes in, and that's what I would do.
Okay.
And it's very neat because I'm also the agent. So sometimes
Right.
when they come to me in a situation like that, I'm able to tell them, hey, look, I'll help you out. You were going to list it for sale.
Mm-hmm.
Let me help you list it for sale.
Right.
So those are some of the cool techniques that, or creative things that I would do
Mm-hmm.
to be able to, grow the business,
Right.
Help out other investors
Mhm.
in it. This is where I'm coming from, another closing like that. And we were able to help that investor with the down payment, and then, but it was a purely cosmetic renovation, and then
Right.
she was able to sell it and make a turn of profit as well. So yeah,
That's cool.
so that's some of the things that I was doing before that I probably will stop doing,
Yeah.
or will try to focus on doing the whole first loan now
Mhm.
instead of doing that. So
Yeah.
But you
That's
still
gonna
do the gap funding. For me, right?
absolutely.
Yeah.
Absolutely.
He won't stop for
Absolutely.
Andre. She
Absolutely.
still's got
We'll
that.
stop funding, yeah.
What I say, if you were
Yep.
if you were invested in the early times, then you still get it.
Yeah, absolutely.
Yeah.
But yeah, that's the reason I got involved in lending, because almost in every deal there's going to be some sort of lending,
Right.
And
Mhm.
so
Yeah.
and once you meet good people, well, they usually will keep their commitment,
Right.
or keep their promise, the
Mhm.
Right.
promissory note.
Yeah.
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 Yeah. We had one deal that I was working with. I was brokering, and I literally had to just walk away from it because the other person that was on the other side was like, "No, I'm at 4," and I'm like, "It don't make no damn sense at all." I
Yeah.
mean, not for that person. You have to do what's legally just,
Yeah.
because you're going to carry it on your shoulders. So I was like, "No, let's try to do something else." Like,
So when you say 4 points, is that like in terms of like a loan, 4 points for a loan? Okay, gotcha.
Mm-hmm. It was a second broker on it, and so
Oh.
they were putting the loan together at 4. I was at 1 and they were at 4. I was like, y'all need to really
Oh.
drop it. Like,
Yeah.
that's too high.
That is
1 and 1, especially if it's not even yours. Like, let it
Right.
go.
gotcha.
Everyone
Yeah.
wants to just piggyback on everything.
Man,
Yeah.
Hey,
no,
1
we don't
point
call
for
it
you, 1
piggyback.
point for you,
Nah,
1 point for me.
Yeah, now we call it affiliate.
Yeah.
We're affiliates. Yeah. So
Absolutely.
that's the best way to put it versus, they'll call them sharks and all kind of, no, they're affiliates. We're affiliates. We affiliate everything.
Yeah.
So I really enjoyed today. I mean, I
yeah,
think,
that was good. I always
yeah.
love enjoying talking to Sergio because he always teaches me so many things.
yeah. And he's
Yeah.
so clear.
Yeah.
Yeah. So,
Well, I mean, we try to, I'm also kind of used to it. So
Mhm.
like as a broker, I've had a lot of people, and so I wasn't always like this, right?
Right.
I was a little bit more timid,
Mhm.
but now
More?
I was more timid. I
More?
was very low key. I know it's funny, but like I was a lot more timid. I was like more low key. But
Mhm.
as a broker, like you have to kind of step out of your comfort zone,
Right.
right? Along with everything, and just kind of explain stuff. So I've been getting better at explaining stuff.
Right.
You know?
That's good. Yeah,
Yeah.
because he does. Like he's all
Yeah.
quiet. I'm like, I know you know more.
Yeah, I know.
Get
It's
it
like,
out.
shake him.
Get it.
Yeah.
Get it out.
No, when he
Sergio.
got here, I was like, oh my God. He was like, hello, ma'am. I was like, ma'am, like,
Yeah.
damn, I feel like I'm going to contaminate
Yeah.
you.
No, not at all.
Man.
But yeah, no. So that's kind of been the evolution of what I've done, and so I
Mhm.
think you met me a little bit later. But before I was a little bit less polished, and just yeah.
It's all right, Sergio.
Yeah, so you see that, and it's pretty cool. I mean, that
Aw.
I'm here now with you guys and on
Yeah.
your podcast.
I appreciate that. How many,
yeah.
have you ever done podcasts
No,
before?
no.
Ah, there we go.
I never
Nice.
done a podcast or anything like that. It's just I was
Thank
invited.
you.
You know what? No, I did do a podcast, but
Mhm.
it was for a couple minutes, and it
Mhm.
was more about being a millennial.
Uh-huh.
And so yeah, I went to college with him, and so yeah, that was the last podcast that I did. But
Mhm.
that was years ago, and
Yeah.
it wasn't necessarily real estate focused.
Yeah.
This is
Mhm.
more real estate investing.
It's really hard to talk about yourself.
Yeah, it is. It is uncomfortable.
Yeah.
it is an uncomfortable
Well,
conversation.
to me, it's funny because like they'll be like who are, and I'm like, well, I'm a lot of things.
Yeah.
It's like
Yeah.
That's the worst question anyone can ever
because
ask
I'm
you.
like
What
I
do. You do?
Yeah.
What?
What don't
Yeah.
I not do?
Yeah,
Yeah.
like,
Yeah, I'm
yeah.
a realtor, so that's why I try to keep it simple. I'm a realtor, but I
Right.
think as you start stepping more and more into the lender shoes,
Right.
that's gonna be more and more the focus of the conversation. Because I
Mhm.
feel like people need funding for things.
Yeah,
And so-
people need funding, and
Yeah.
and I think in the lending side,
Yeah.
it's a longer conversation
It is.
than the normal contract because the funds are different. Like
Mhm.
the deal is always different.
Yeah.
The house is based on the contract. Everything follow the lines, skip
Yeah.
trace, whatever, dot, whatever. But in the lending side, you gotta
Yeah.
really get deep.
Yeah. And,
Yeah.
along with that, I'm a big advocate for Spanish speaking only customers
Mhm.
for this.
Mhm.
You'd be surprised how many people that are just mainly only Spanish speakers,
Right.
but would love to be investors.
Right.
That's the reason that I'm.
Why
doing
don't
it.
we should do a for just Spanish speakers? We
Mhm.
should do like a little
Mhm.
dinner or something. You can talk about lending. We can talk
Mhm.
about how we can provide them with the houses.
Mhm.
Yeah, absolutely. Because
Yeah.
That would be great.
where
So I know Sergio sponsors a really nice spot.
Yeah. The Houston Club. We had an event on Saturday at
In
the Houston.
Space City, it was
Yeah,
nice.
It was nice. It was very large.
Mhm.
It was kind of like a national thing because they had multiple people come in from
Yeah.
different states and different cities from out of town. So
Yeah, Alma was
Yeah.
there.
Nice,
Yeah.
nice.
Yeah. So and I was able to just kind of help them with the
Mhm.
venue because I'm a member of the gym and everything.
Right.
So, yeah. Mhm.
Right.
That was pretty neat.
It was nice.
Yeah.
Mhm.
Yeah,
Nice.
absolutely.
They were
yeah,
gonna kick
no,
us out. We
They
were
were-
too loud.
Too loud. Yes,
They
that's
kicked y'all
right.
out?
He was too loud.
Yeah, it's my fault. It's my fault. I sound like.
I'm
the
glad
guy
I
that-
didn't go. I would have got kicked out for sure.
Yeah. Yeah.
No.
But there was a lot of people there that were there to learn
Mhm.
and wanted to, learn about real estate investing.
Right.
And a majority of them, they were. I hope they picked up a few nuggets from some of the
Right.
speakers that were there.
Oh, I'm sure.
Yeah.
Absolutely.
Yeah.
So.
We need to talk about that.
Yeah.
Y'all vote.
Yeah.
Y'all vote.
Yeah.
Yeah.
Absolutely.
No, but it's really good. Like I'm fixing to go to speak at an event in Tampa, and it's all Spanish.
All Spanish.
Yeah, it's all Spanish, and I really, really, really enjoy that crowd. They're like you.
Yeah, yeah,
They're
yeah.
like you. They're not boastful and all out there and yada yada yada. They're there to really, truly, genuinely help.
Yeah, absolutely.
Nice.
Yeah.
Yeah. Because there is a place for a real estate investor, and that
Mhm.
is to create value out of a
Right.
distressed property.
Mhm.
You go in there, you renovate it, and then you can rent it out, and and what used to be an ugly property is
Right.
now a good property,
Mhm.
you know, and so there is a place for investors. So, and there's a lot of folks that may work in the construction,
Mhm.
but don't know all of the back
Right.
office and the
Right.
office stuff and the
Mhm.
paperwork. And
Right.
so I'm a big advocate for that. I've turned a couple of folks and worked with a couple folks that primarily only speak Spanish,
Mhm.
and they are renovating homes.
Mhm.
You know, I'm pairing them with the financing,
Right.
and they allow me to list their property, and it's great because the home is in better condition.
Right.
You know, it's in new
Mhm.
condition, and they created jobs throughout the process. They spent money on materials to
Mhm.
improve the
Mhm.
property. You know, they maybe paid a little bit on the financing, and so
Mhm.
so yeah.
Yeah. That's awesome.
Yeah,
Yeah.
it is. It is, and so I'm a big advocate. And I'm in my office. You know, it's in the Houston area, but it's in the heart of the working class neighborhood.
Right.
I don't really, and
Where is it?
It's off of the Gulf Freeway.
So we can go
Yeah.
stalk you.
Yeah,
I've been to
you're-
his office a couple
yeah.
times.
Yeah. Sometimes we try to have lunch every Friday.
Mhm.
Just to whoever wants to come.
You're
It's
buying
open
lunch
invitation.
this Friday?
I can.
Okay.
Yeah, I can.
We're going to have lunch this
Yeah,
Friday.
we can have. Y'all can go. You're welcome to come too as well.
I know last time we
And,
went, it was good.
Yeah,
Yeah.
yeah, Mexican food, and so yeah.
Okay.
Yeah.
Yeah.
Well, Sergio, thank you so much for coming
Thank you for
out. I
having
know
me.
you were
We were
busy.
so honored.
Always
Like,
busy.
yes.
Yeah. Thank
Yeah.
you for
Yeah.
having me. It's been
And guys, thank you so much for tuning in. And we'll see you guys next Wednesday.
Bye.
Okay, thank you.
Bye.
You want to catch it?